Good evening, good evening, good evening, everybody. Had a little technical difficulty. Had to restart my computer. Don't know why. Don't know why. Um, if y'all will, I see some people on here. If you will, drop something in the chat to let me know if you can hear me and see me. Let me know everything going good. What's going on, Rhonda? Back at the number one spot. Pamela. What's up, Rhonda Green? What's happening, Pamela? What's up, FC? Hola, Valdez. Okay, you can see me, hear me. What's up, here to learn and share? I appreciate that. Let me go ahead and get to it. Had a busy day today. I said, hey, man, we got down to that weekly fair value gap that I was eyeballing. Excuse me. So let me jump on and do a chart prep and see if anybody got any questions. If you have anything for me, feel free to drop it in the chat. If you have anything, if you got any questions, concerns, comments, feel free to pop it in the chat. The link is in the chat. The link is in the chat. The link is in the chat. If anybody would like to pull up and ask a question for the 2024, we here. We here. A new year for the 2024. Shout out all the Spider Gang members that's been holding it down for a year. We've made it to a year. January 1st is the official year, but we had some people that made their year on December 28th because they were some little looky-loos and found the link early and signed up early. But shout out all the gang. We celebrating. We're going to celebrate 1 year. All of January, whole January. We're going to leave this background up and we celebrating 1 year, all of January. If you wonder why I'm running my mouth so much, I'm just trying to get my trading view and everything back up because I had to restart my computer. Then I got to get my fancy dancy back together. Y'all know, well, y'all probably don't know, but whenever I restart my computer, my fancy dancy don't be acting right. So I got to get all that back together before I want to get all that back together before I shared my screen. All right, man, let's get into it, man. Shout out to everybody that's in the chat. Shout out if anybody watching on Twitter or X or whatever you want to call it. Welcome. If you don't know, we simulcast now on the tube and on Twitter or X or whatever Elon gonna call it next week. We are simulcasting. We are fancy. Oh, you fancy, huh? That down there, that green area there, that's that weekly fair value gap that we were eyeballing. If you remember when we talked on Sunday, Rhonda Green is pulling up. What's up, Rhonda?
Hello. Can I show you a screenshot of the trade I took today?
Sure.
Okay. It was in my, not my real account. So I'm still practicing. Let me see. Where is the share?
What's up, Lump? It might be under present or share screen or something like that. It say present on my side.
Okay. Here we go.
There you go.
All right. So this was, of course, supposed to be a silver bullet trade, and I did the opposite of what I was supposed to be doing, but it still worked out. So I was looking at this, started at 10 o'clock, and I marked out my fair value gaps on the 1 minute. And I was also looking at the 3-minute chart over here. So I also saw this fair value gap. So my entry should have been when it came back up into one of these. And what happened was I saw this consolidation. I was like, well, it's going to go back up to this one, or this one. So that's why I took this trade to kind of go against the grain.
Okay.
And I say it worked out because, see, I got in and I got out and it worked out for me. But this, if I was following the rules, should have been the entry point and I should have wrote it down. But my question is, how do I know it's not going to go back up to these fair value gaps up here?
You don't. You have to wait until that's why if you're trading against the grain, you just get in and get out quick. And then if like the price was clearly bearish yesterday and today, so the lower the time frame, the imbalance is above you, the less weight you want to put on it. You know what I'm saying? The less weight you want to put on it, unless the market is extremely choppy. If it's extremely choppy and it's just going from external to external, then you can kind of like look to hit those ones that's far, far away, away from price. So what I do, I look at the internal. I look at the lower time frame imbalances, but I only mark the higher ones. I only mark the higher ones, like on the gray screen. Is that a screenshot or a chart?
It's a screenshot.
Okay, go to the chart to around the same time.
Which, this side?
Just go to the chart around that 1 minute, around that time of day. It don't matter.
Oh, like a current chart?
Yeah.
I don't have my charts.
Oh, you don't?
No.
Okay. All right, don't worry about it. So what I do, cause I did the same thing this morning what you did. Around that same time, I took a long back up, but I was only taking it back up. It's a 15-minute fair value gap up there somewhere, like above that first fair value gap at the bottom. I think it went back up. Let me look. Okay,
I can stop sharing, then you can show.
Hold on, because I said, but to answer your question, you don't know, and that's why you let price tell you what it want to do, and I'll share how I'll share what I look at to see if price showing me, hey, I'm going right there. That 15-minute fair value gap right there. And that's around 10 something in the morning. Remember I told you the same time? It was around the same time. That's why I had a 15-minute fair value gap marked out there. And then you see I got an hourly marked out here. Right? So I only mark out like the so let's go down to 1 minute. You had it on 1 minute, I think. You had it on 1 minute and 3 minute.
Yes.
Okay, so yes, this time of day right here. Trying to get it big enough so y'all can see. Okay, so we got all kind of gaps here. We got a fair value gap there. I think that's the bottom one. Yeah, I think that's the bottom one. And we're looking at, that's the second one right there. That's the fit in its line up with the 15-minute. And then I think you had one marked out up here somewhere. One of them, we're just gonna mark this somewhere up there. You had something marked out up there, right? So this one here, right? If price was super choppy, then I would be looking for it to hit this hourly up here, and I would give more weight to this 1 minute right there. But when price is like directional, and in this case it was directional to the downside, right? I'm not looking for it to come higher than this 15-minute right here. And the reason why I'm not looking for it to come higher than that 15-minute is because that 15-minute is right there. It's like in the premium. That's the higher time frame that's in the premium. In this 1 hour, it's outside of that price range. It has to go take out external liquidity to get to that hourly for this price leg right here. You see what I'm saying? So at this time when prices like la da la do to do, see that right there is there. And then once we get over here to like this 10 o'clock and get to this time frame right here, it's like when we come and we whack out all of this buy side up there, we're still coming back to that premium 15-minute for this price leg right here. So it's like I put the weight on the higher time frames, like as far as like the 15-minute, 5-minute, hourly. If this hourly was inside this range, I would have been trying to take the long back up to that hourly. And I would have just been, after we took out this high, I would have been monitoring if I want to get out. And the way I decide I want to get out, and this is another way I try to let price show me what it want to do. I start watching how price is reacting to PD arrays. Y'all, you know, when I be doing like the live tape reading, and I be like, if this bullishness is to continue, we should not close back below this down close candle over here. You know what I'm saying? Or we shouldn't close back. And once we get a closure below that down close candle, it may just be a fake me out, but I'm getting out. You know what I'm saying? Because it's like, it's showing me, okay, I'm ready to turn back around. When it start disrespecting the discount PD arrays, I get out. Like, and then when price is coming up here, if I'm looking for a reason to get short, right? In this 15 minutes right here, this is a 15-minute chart. So like the price gonna have to move a whole lot. But if I'm looking for a reason to get short, and I wanted to get short off this 15-minute, but just say I was scared to get short off the 15-minute fair value gap right there, because price, I didn't know if it was reversing on me. We had took out the daily low. I wasn't too sure about my bias of coming down here to the sell side. But once we got to this, matter of fact, let me do this right here. Okay. Once we got to that 15-minute, we hit it there. And then I'm like, okay, I want to see what it do. Price went up above it, right? And then once it came down and it closed below, matter of fact, it closed below the 15-minute and this 1 minute and this candle. Once price came down, once I get a closure below this, that's when I'm gonna drop to my lower time frames and start looking for a reason to what in the world? What just happened? Why did my candles change? Am I tripping? Okay. 5. Oh yeah, that's 5 minutes. Okay. Then 15. God dog it. 15. So I was looking at the 5-minute the first time. I guess I was because it came to the 15-minute. Okay, 5-minute. Yeah, I was looking, but anyway, we came up there. Nah, something looked different. Did something change just now? Let me start this back again. Oh yeah, I was looking at the 5-minute the whole time.
Oh, we must have been on a 5.
Yeah, because the candles look like different. Okay, anyway, on the 5-minute, this 15-minute. Okay, on the 5-minute, that's the 15-minute fair value gap that I was looking at right here. Oh, that's what it is. I went to the afternoon. All right. Okay, 15-minute. 15-minute. Yeah, I had to be on the 5-minute because it looked different now. All right. Anyway, what I was saying, now let me go back and replay this. So I thought I was on 15, but I was on 5. Okay, so on the 5-minute, we went up to the 15-minute fair value gap that I was watching. I'm like, hey, I don't know if I want to, I want to see what price do. But once we hit it, and then we came back down, and we, you know what I'm saying? Once we went there, didn't make it to it, went there, hit it, and start rejecting off of it, that's when I'm going to go lower. And now I'm on 5 minutes. So I'm going to go lower, and I'm going to be watching it to see what kind of setup price gives me. You know what I'm saying? Because now I wanted to go short there, right? But I wasn't sure about my bias, so I didn't just go short when it got there. Now we come down here, it was the 1 minute I was looking at. I see we closed below the 15 minute, closed below the 1 minute, right? This is a 1 minute candle, closed below the 1 minute. So now I'm looking for a reason to get in right around here. And it's like I got like a million different ways I be trying to get in now, because I be trying to perfect everything. But this is when I'll start looking to get in to go short, after I let price show me that I don't want to get up there to that candle up there. And that's because on the, you know what I'm saying, on the when we came to where I wanted to get, this is my reactionary point, right? Anticipatory reactionary point. And price got there, and now price is starting to disrespect the up close candles. We're, you know what I'm saying, we're closing below the PD array, closing below the candle, closing below the candle. You know what I'm saying? It's just continuing to go. But that first candle right there is telling you, okay, I'm turning around, because it's starting to disrespect the premium, the discount PD arrays. Did I lose you?
No, you didn't lose me. If I was looking at this point, I would just wait for it to come back into that fair value gap, which I don't think that it ever did.
Up here?
No, come down that candle. Oh, not that far down. The third candle, that one, I would have marked out that fair value gap to see if price came back up into that, and then I would have gone short.
Now, this is why I, like I be using like the inversion fair value gaps now. I be using candle closures now, because it's like I've adopted a lot of different entry methods based off of the concepts, because it's like I've studied price so much, and a lot of times I get left because I'm waiting on one setup. You know what I'm saying? And that's fine if you want to wait on one setup, but price ain't gonna always do that every day. So, you know what I'm saying? Like, if and there's nothing wrong with saying I want to wait for it to come back here to enter off of that fair value gap. Ain't nothing wrong with that. Right? There's nothing wrong with that at all. And then once it takes that low, I don't want that no more right now. I don't want it until like another time. You see what I'm saying? But a lot of times, once price comes back up and do this is the short right there. And then once price shows you what it wants to do, it's like what Michael called it, the close proximity entry. You have to get like a close proximity entry where, let's just say, you want to get short here, right? You want to get short at this fair value gap. When it got there, you wasn't sure about your bias, right? So when this candle opened up and we went above it and then came back down and this candle closed below this candle's low here and below that fair value gap, below the fair value gap is all you really need. But below that low also, that's on steroids. So when this next candle opens, you can go short as soon as that candle open as a close proximity, especially when it starts trading back up, right? When it starts trading back up, you can use this 1 minute fair value gap right here to sell off of, because it's, you know what I'm saying, the price is below it. And as you see, it went back up to the top of it, to the tick, right? Since it's a fair value gap right there, you can use that one to go off of. And then you'll still be safe, because you already know price is not going to come back above this high, because we rejected it and closed below these candles here. So you've come up and you've run stops. You see what I'm saying? Whenever you see them long wicks like that, you done ran stops, right? Just like you came here and you ran stops there, then price came all the way back down here and then went back up, right? And then once you took, now you've run stops one time here. So now anybody up here feels safe, right? They feel safe, anybody up here. So when you went up there, you ran stops again. And then now price don't need to go all the way back up there. It's going to hurry up and get down to the sell side. But that, you know what I'm saying, that's like more advanced for, like, you know what I'm saying, using just close proximity entries, where sometimes you might see Michael, he'd be like, okay, that's where I wanted to enter, but I'm just going to get in here to show you the entry is not the most important thing is the stop management. You know what I'm saying? Where you know price is not going to go anymore. So it's like that. That's just one of the things there that you once you mess with the concepts for a long time, and you get left enough times, you start developing ways. And then I'd be learning a lot of stuff from other traders, like a lot of traders who trade ICT concepts, and they still use their entries based off of the old retail stuff. Like, are you familiar with like chart patterns, like Head and Shoulders and all of that right there?
I've heard of them, but
Okay,
I
like
never
for
used them.
for Head and Shoulders, right? Whenever you let's just say, I'm saying, this is a Head and Shoulders, and we want to reverse Head and Shoulders, whatever they call it, and we want to go short, right? A lot of patterns, like once you close outside of the pattern or the range or the trend line, soon as that candle close, you just enter on the next candle. You see what I'm saying? So a lot of people, they still make their entries like that. Like, just say, like I seen videos where people who trade fair value gaps, right? They won't trade it when the price is going into the fair value gap, because they've been conditioned to not go short on green candles. You know what I'm saying? So when the candle go into the bearish fair value gap, they won't trade it until it comes back out and close outside. And once it closes outside, then they'll enter and then go like that. That's just, I've seen people, but it's just different entry techniques. But I can't remember what we was talking about. Now I just been running my mouth. Oh yeah, that's how I just let price show me what it's going to do. Like, if I know it's going to go back up, right? But if I know it's going to retrace, or if I feel like it's going to retrace, then I'll let price show me that it wants to continue up, right? Price that it wants to continue up. And so, what that looked like coming into the 10 o'clock hour, right? That's the 10 o'clock candle right there. Right? That's the 10 o'clock candle right there. If I feel like price is going back up to this fair value gap up here to continue down, which I did, right? Once we start to push up, right? Once we start to come up like that, got a strong closure up here. When we came back here and came down and didn't take out that low right there, right? We didn't take out that low and respected this candle right here. I just got in as soon as this candle opened up right there. Right. But my target was to come up here, because we had already came down and ran stops. And then when this red candle here came back down and we didn't take out that low and respected this candle, we just came down and stopped right there. All these bodies lined up right there together. We're respecting that change in the state of delivery right there, right? And you say, and for anybody who say, Tim, what's the change in state of delivery, right? This red candle, right? The open on that red candle right there, right? The open on that red candle right there is the change in the state of delivery. What is that? The price was bearish. We were coming down. We took out sell side. We kept sell side, sell side, sell side, sell side, right? We took out sell side, right? And then we wicked up off of it, right? And we're well below the daily low. Now we're inside a macro time frame, right? We're inside a macro time frame. We've already taken daily sell side, right? We're in a daily liquidity pool. The macro's job is to attack liquidity that has not been touched or an imbalance, right? So we're already inside the daily liquidity. We're coming into the macro. So where's the liquidity that has not been touched? Up here above these highs up here. This is the liquidity that has not been touched. These are the people that's been winning. The algo is fun to come punish them, right? Because everybody looking down here, just like me. I was looking down here. We finally got there, but I was looking down here. But it's 950 to 1010. The macro fun to punish them. So price is bearish. It's coming down. It ran some more stops right there. And then this 959 candle right there, when we went above that opening price on there and closed up there, that right there, that price right there 47.58 even, that's your change in the state of delivery. Your delivery was bearish, and now your delivery is bullish. And that price right there is the price that the algo is going to remember. So I'm watching that price right there to see what the algo does when it gets there, right? Because I want to come back to this 15-minute fair value gap. So when this candle closed, this one closed bullish, this one closed bullish, right? This one here, right? We went down below it. We went down below it, then we went back up, right? That right there is when I really wanted to take it, right? That's when I really wanted to take it, but that was right at 10, right? And I like to let it show me what it's gonna do after 10. That's just me. You know what I'm saying? I want to let it show me what it's gonna do after 10. And I'm glad I did that, because this right here would have made my duty hold tight, right? So when this one opened up and we came back down to that price, right? When we came back down to that price and we went below it, right? When we went below it, as soon as we went below it there, I put my limit order in right there to go up. It put in like a stop limit to go, you know what I'm saying? Stop, take me up, because we went below it. That's the price I want to get long on, you know what I'm saying? And then that candle closed, got me in, and that candle opened up and kept going up. Why did I pick that price right there, 47.58? That's the change in the state of delivery. That's the price that the algorithm gonna remember to come back to do what it got to do. And at this time, it just played out textbook. It just played. But the whole thing about remembering about the change in the state of delivery is you got to understand what the draw is. And right here, the short-term draw was this imbalance back above us, right? Why is that? Buy side up there that have been hit, imbalance up there, 15-minute imbalance up there. That's the highest time frame imbalance inside the price leg. You know what I'm saying? That we was looking at a 1 minute, whatever. That's the highest time frame imbalance inside the price leg. Hopefully I ain't confused nobody with that. Hopefully I understood that. And so that's me letting price show me what it want to do before I get into the trade. That's what I started with all that. Change the state of delivery, price went up, came back down to the change the state of delivery, respected it, didn't go nowhere, pang out, going up. You know what I'm saying? And the reason why I put, once it went below it, I put a stop order. I get that from Robinson. How he trade DR, it's like he put a stop order where he wants. So when the price coming back, it'll get him. So that way, when it's coming down, if I would have put a buy limit right there, if it was coming down and I was wrong and it just kept sliding, then I'd have been out of gas. But when it go down past it and I drop the limit order there, it's got to come back to get me. You know what I'm saying? And then,
yeah, and the other thing I would have looked at is at 9 o'clock, that red candle to the left.
9?
Yeah.
Where am I going?
To the left some more.
Whoa.
I see like those equal highs, and I know there's only 2 of them. That red and that green candle, they have equal highs at the bottom, that fair value gap.
These two right here? Oh, this right here?
That green candle, and then to the left, that red candle.
Oh,
I would look at those as equal highs, and I would think that, okay, there's some liquidity above that.
You would be right. You'll be right. That's the liquidity that you got equal highs there, right? You got a single high here, right? So all, and you see what price did. Price came all the way. Matter of fact, I think it got above these right here too. Price came all the way back up there, right? And took out all this liquidity that was up here, right? Everything. See this one here, this 10 o'clock candle fell just short of those equal highs that you was talking about. So this 10 o'clock candle cleared out all of this, and then these candles hit. This one cleared out the equal highs, and this one right here was just adding insult to injury. The 1006 candle that just added insult to injury. But yeah, you would have been correct on that. But that, like you said, that's totally against the grain because price was clearly bearish, and you want to be, you know what I'm saying? You just want to be like taking what you can get. Don't get greedy, just take what you can get.
Okay, thank you very much.
You're very welcome. Rhonda Green. Rhonda, what? Let me see. Who was that? Oh, that was Lil Hawk. That was Lil Hawk. Lil Hawk was the first one. Lil Hawk was the first one. Yeah, man. I appreciate Rhonda for always pulling up with the hard hitting questions. Shout out Rhonda going in there and trading like a pro. Rhonda, I peeped the apex in there. I peeped the apex. I ain't mad at you. I peeped that apex in there, Rhonda. I see you. Speaking of apex, if you want to be like Rhonda and take a shot at trading a prop firm account, Apex have an 80% off sale right now. I think they got a couple days left. I got a link in the description. The link says 50, but they're doing 80% off. So no matter if you go there, it's gonna apply 80% off to your 1 day left. So you got 1 day left, 80% off. Use the link in my description. So you can get a what's the name? A 25,000 account for how much is that? 147 minus 80%. $30. It'd be like after tax, it'd be like $30 and some change. So you can pay $30 and get a $25,000 account. Take advantage if you want to. If you got a system already and you want to take a shot at trading prop accounts, use my link. I'll appreciate it. I don't know if I need any of this. I'm just going to delete it all. So, speaking of letting price show us what it wants to do. Remember on Sunday when we talked, I said I would like to see price come back to this weekly fair value gap before taking out that high. And I said if we took that high, I wouldn't be interested in trying to buy anything long as far as swing trading if we took this high first until we came back down to this monthly fair value gap. Now, since we've come back to the weekly fair value gap now we go back to what I was talking. I go back to what I was talking about as far as letting price show me what it wants to do. Now, you can trade your own system where, hey, we come back to the weekly. You be like, hey, we got to the weekly. I want to get into me some swings to go back to this high, right? Or you can say, hey, I'm going to wait until we come down here and touch the breaker. I want to get to 47.0650 before I get into some swings. Or, you can use it how you want to use it. Let price show you what it want to do. But we just came and we kissed a weekly fair value gap. Boop, we kissed it, right? Back in October, when price started running, we were not getting pullbacks. A pullback did not exist. We were not getting pullbacks. So I'm not saying you got the FOMO in to just jump in because, a lot of like I didn't get a chance to swing anything in this run up right here because it wasn't giving me the setup I was looking for my swing trades, right? Not beautiful run, but I ain't get a chance to participate because it wasn't giving me my setup. That's part of trading. No harm, no foul. Who cares, right? But let price show you what it want to do. Overall, price is bullish. Whenever you have a retracement, it's a retracement, bullish pullback. pullback, whatever you want to call it, whatever name you want to put on it, that means price is going down because price is bullish. Price is bullish, and when you get a retracement, price is going down. How far down will it go? Look for the clues. We have a weekly bullish fair value gap. Its job is designed to keep price up. So on a weekly basis, you don't want to see a weekly candle close below this fair value gap if this one is to do its job. Now, there's a monthly fair value gap below it. That weakens this a little bit because there's a higher time frame fair value gap below it. But this one has confluence. It's in line with two weekly breakers. We got a weekly breaker here, an old weekly breaker, and a newer weekly breaker. This is the one I put the most weight on because it's more recent. This one over here, that's forever ago. But this one right there, that one is, let's see how far back that is. From this week here, back to that breaker right there, that's 24 weeks. Is that 24 weeks? Yes. 23 weeks. So that, you know what I'm saying? That's the one I put more weight on that one because it's more recent in price, right? More recent in price. That's why I put more weight on that one, right? Remember, you got the high of the breaker, and look where we are right now. You know, we're kind of flirting with that breaker. True, we ain't got like a lot of real price action going on. We still got that holiday type vibe going on, but these are all things that you would be watching, that I would be watching to let price show me what it wants to do. All right, so we've reached the weekly. That's a higher time frame PD array that I'm looking at. This is the one I'm focusing on right now because this is the piece of price action that I'm watching. All right, from there. I'm watching a piece of price action from here, from there to there. Why? Because that's after we broke out of this range right here. Right? That's after we broke out of this range right here. When we came down, right? We got one section, two section, three sections. You know what I'm saying? Three different sections of this price leg right here. So we came up, blew through the first section with no kind of pullback. Boom, blew through the second section with no kind of pullback, right? Once we got here, went down a little bit, then we blew through the top, right? So that's why I'm coming from there to there. I'm looking at all of this right there. Here we got sell side, buy side delivery. Right here, we got sell side, buy side, sell side, buy side. So we got sell side, buy side there, sell side there, buy side there. So I'm looking at all of this right here as a balanced price range for right now. So that's why I'm putting more weight on this one here to see what price wants to do. Again, you have a higher time frame below it, but I wouldn't want to see us go back to that one until we took that high right there. Right? Until we took that high right there. Because we've come so close to that high. This is that's a long way to pull back just to take that high right there. That's really weak. That's weak price action to come all the way down to this monthly just to take that high right there. Better price action is to pull back into this fair value gap above the balanced price range, right there at the breaker, to take that. Because once we came up here, we created that weekly breaker, right? And that weekly breaker's job is to protect the implied move. The implied move is taking out that high. So when you come back down, this fair value gap, this breaker, right? This break, all this stuff right here is to protect the implied move of going there. Okay, now that we done beat that horse to death, let's go down into the daily, right? We tapped into a daily fair value gap again, right? I would love to see us come down to the lower side of this daily fair value gap. I wish we would have came down there today, came down to the lower side of that daily fair value gap. Why? Because that would have gave us a discount of the entire move, right? That would have put us back into a discount of the entire move, which would have been a good place to get a running start up to that high right there. Now, looking at this, we had a very shallow run below the consolidation right there, a really, really shallow run below the consolidation, and then we wick back up, right? Very shallow run, wick back up. That makes me feel like we need to push deeper, right? That makes me feel like because it's a very shallow run up under all this consolidation. Yeah, we were climbing up, but it's pretty much consolidation, right? Very shallow run below that, right? It makes me feel like we need to push deeper. And I'm looking at this, see, just like here, how we had this bullish fair value gap right there that we was anticipating to be a inversion fair value gap. I don't know if y'all remember, but I said I want to see this weekly fair value gap get blown through and come back down to this. The reason why I said that, because I wanted to see it be used as an inversion fair value gap, which it did. We blew through it, closed below it, and then today we kept selling down. Didn't even go back and touch it. Gapped up, didn't touch it, and kept selling down. So there you go. The inversion fair value gap we was anticipating. Boom, it did it. Now, what am I looking at now? I want to take out these lows, push deeper into this weekly fair value gap, into this daily, all of that right there, this daily volume imbalance effect, come into the discount, and then give a reversal look to go back up. And then this weekly imbalance in the same place as the old one, use that one as an inversion fair value gap to support price to go get that high. Right? That's what I'm looking for. That's what I'm anticipating. That's what I would love to see. Right? Again, I don't want to come all the way back down here just to take that high. On the daily, we didn't get there like I wish we did today. I was hoping we would push down and get all the way down there. We did hit the low that I was looking at. We did hit it. I was able to take a trade this morning, took a long this morning that we talked about. I took a short this afternoon. I've been taking very small positions during this holiday just to keep my gears moving. You know what I'm saying? Price been real, not the most beautiful. It ain't been horrible, but it ain't been the most beautiful. So I've been taking small positions. Let me update the chart while I'm running my mouth. The daily high, daily low. Yeah, want that to come down. And then once it come down, I wanted to just disrespect this bearish breaker right here. Right, this breaker that we've made, this low came up, took out that high, and we wick below that right there. Boom, we now got a bearish breaker right there. I want price to come into this discount and then blow past that bearish breaker, and then I'll even take, what would be even better is if we made a daily fair value gap right here. Right, this daily count ain't finished yet, so I'm not going to leave this here. Right, but if we made a daily fair value gap right here, okay, made a daily fair value gap right there, and then we came down and got below the equilibrium, came down into this, let's just say we hit this fair value gap and this volume imbalance right there on the daily. Right, we got another daily fair value gap down. We got a whole lot going on inside there. Right, so come down here, let's come there, and then get back above this, then use that as an inversion fair value gap. Use that one too. All right, That'll help out. That'll make it even, support me even more, because you'll have the daily, the weekly. You know what I'm saying? It'll be like building blocks, right? Daily, weekly, because um, I can't think of what I'm trying to say right now, but y'all get what I'm saying. Nah, get out of here. Don't eat that. So daily high, daily low. Let's grade this weekly real quick. We're gonna grade this weekly to see. And if anybody don't know what I mean when I say grade this weekly, break it down into quarters, right? We break it down into quarters, and the 25% of this right here is at 47.24 even, and equilibrium for the price leg that we're in is 47.2075, right? In the scheme of a weekly, that 1.25 points is close enough for government work. So if we came down to the just wick below the top 25% of this weekly and continue up, because anytime you got an imbalance, if price reacts off of that top 25, exceedingly bullish, reacts off of the top 50%, exceedingly bullish. Once it starts getting down into the 75% and completely feeling it, it can still be bullish, but it's a weaker bullishness, right? If it's really bullish, you want to see it react off that top 25. Strong bullish, you want to see it react off that top 50%, right? Anything below that, it can still be bullish, but it's getting weaker. The you know what I'm saying, the oomph is not there. Running out of oomph. Okay. We've graded the papers. We do have a daily SIBI up there, right in the same spot as that weekly. I'll change this to a daily SIBI now. Change that to the daily SIBI, because the weekly inversion has done what I wanted to do. The way I use inversions is from the inversion to the next liquidity, right? So from that inversion to that low, that was all I wanted that inversion to do, and it was done. That's all I was trading off of today, from this inversion to that low. And that's it. I didn't get a chance to hold it the entire time because I didn't get the short in the morning off of that 15-minute. I took a long up to it. Didn't get the short, but I was looking for the short down to that low. And then in the afternoon, I took a short and took it down to that low. Daily SIBI. All right. Again, that SIBI is right just inside the premium, right there. So we want that to blast through that and close above it. Blast through it, close above it, so that we can use that. That's where that weekly fair value gap was. Let's go to 4 hours, since we don't have much going on those charts. There's a 4-hour fair value gap above that. Since I got that daily there, I'm going to go ahead and move this out the way, because I don't need all that junk on the chart. All right, this was our new day opening gap from yesterday. And today, let's go ahead and mark this out real quick. Marking out my new day opening gap. All right, so closed there at 4:59. We opened here at 6 o'clock. That's the new day opening gap right there. It's 1.25, 1.25 points. Not a real big gap, but that's the new day opening gap. Back to the 4 hour. Look at that. Um, Came back up into this 4 hour fair value gap this afternoon. Came back up into a 4 hour fair value gap this afternoon. That's what I was basing my afternoon trade off of when I came back in. This 6 a.m. SIBI right here that we had traded back up into. Once I got my reaction off of that, again, letting price show you what it wants to do, right? Go down to the 15-minute charts right there. See right here, when you look and see, you be like, hey, Tim, what did this come to, right? Let me break this down again. So y'all, I don't share nothing with y'all that I don't use every day, right? Funny, entertaining. What's up, Stacks? When you came here? What's up, Mark? Happy New Year. Happy New Year. What's up? Y'all done eased up in here on me. Oh, I don't tell y'all nothing that I don't use myself, right? So right here, you see this this 215 candle right here. We went up there and then we wicked down, right? Right. We're gonna make this interactive. We're gonna make this interactive. Is there anybody who would like to pull up on the link? Anybody, somebody, just I don't care. Anybody, pull up on the link and I'm gonna ask questions and we're gonna walk through what's going on with price right here. Somebody just pull up. Anybody. Great learning experience, great interactive time. I y'all know I love class participation. Rhonda already pulled up with the hard-hitting questions. Somebody pull up. Anybody pull up. Valdez, Lil Hawk, FC, hit a learn and share. Rhonda, you welcome to pull back up if you want to. Mark, Stacks. Who else I seen now? It's 26 people on here. Somebody pull up. Click on the link and pull up. Then put the link back in there again in case you be like, I can't find the link. I can't see it. Now, there it is. There it is. Come on, class. Be brave. That's right. Be brave. Be brave. Don't be shy. Dry your eye. Don't be shy. Dry. Yeah, I already gave you a big clue about the dip. Stacks, they hit the door. Stacks, I'm in bed. Maybe next time. All right. Everybody scared to pull up. Everybody scared to pull up. We got more excuses in the chat than somebody going to jail. Hey, okay. So remember earlier when I told y'all that I let price show me what it wants to do. When it get to my anticipatory reactionary point, right? If it's been a span of time, sometime I'll wait to let price show me what it wants to do. Right. And looking at these 15-minute candles, you'll be like, okay, Tim, what did we do? Because when I look left, I don't see anything that's just like concrete, right? I don't see anything that's just concrete, right? But if we look a little bit closer, we can see something that's concrete. Now, remember when I said they based everything off of this 4-hour imbalance right here. If you look at that 4-hour imbalance, right? Put a little center line on there, right? We came up to right there at the consequent encroachment of that, right? So we came up to the consequent encroachment was 47.72, right? That candle right there came all the way up to 47.71.75. So the imbalance that I want to sell off of, we came up, stop on a dime right at the consequent encroachment. And you say, Tim, but that's not exact. You'd be right. You come down to the hourly. Come to the hourly. Nothing amazing there. What do y'all see anything amazing there? Nothing amazing right there at that price point. Nothing amazing. 15-minute. Come to the 15-minute. You say, we came to the high of this order block right there. We came right, but that's reaching. Like coming to the high of the order block, that's reaching, right? On the 15-minute. Then you say we came exactly to the consequent encroachment of this up close candle on this high, but that's reaching. You're just picking some random high to say we came to okay. So we went to the 4-hour, one tick away from the 4-hour consequent encroachment, came to the high of the order block on the 15-minute, came to the consequent encroachment of the wick of this rejection block right here, consequent encroachment of that rejection block right there. The wick, the candle, well, the rejection block would be actually to that high right there, right? And that rejection block consequent encroachment matches exactly to the 4-hour, right? If you don't believe me, look at the price, 47.72, 47.72. It matches exactly, right? And you say, see, it's not even hitting the consequent encroachment of the rejection block. You're just picking some wick. I'm going to give you that, right? Come down to the 5-minute. Right? Come to the 5-minute. When we get into the 5-minute, we look like, it didn't come. What did it? It didn't do anything on the 5-minute. Like what? It came to this. Oh, you're reaching again, Tim. Okay. Go down to the 1-minute. Right. Breaking everything in half. Go down to looky, who stole the cookie? What do we have here? You see that 839 candle right there? See that 839 candle right there? Let's take this. Let's take a line right here. And we're going to put a line right there on the 839 candle right there. The 839 candle right there. Can somebody in the class tell me what that price at that 839 candle at 47.71.75, what is that price based off the fact that price was moving bullish, right? Was moving bullish, came to an anticipatory reactionary point where the liquidity resides, and then price came back down below that opening price right there. Can somebody tell me what that opening price is? What is that opening price right there? What do we call that? Does anybody know? Does anybody know? Give you a clue. Give you a clue. There's your first clue. There's your first clue. There's your second clue. There's your third clue. Does anybody know? That's your clue right there. Who can tell me what that is based off the clue? What is that price right there? 41, 71, 75. What is that price right there? We just talked about it when Rhonda was on here. Is my chat working? If the chat working, put a 1 in the chat if the chat working. Put a 1 in the... There you go, Rhonda. I mean, Pamela. There you go, Pamela. There you go, Pamela. Change in state of delivery. That price right there is the change in the state of delivery. So we go back there and look at this 15-minute candle, and you say, man, why did price throw on brakes right there at 41, 71, 75? Because price was moving down. We reversed, started moving bullish, right? Came up, took out any stops that was above this high, that high, got into the 4-hour SIBI, and just before it hit the consequent encroachment of this bearish fair value gap, it got to the change in the state of delivery. And the algo said, hurt! This is where I turn around. And then we turned around and came back to the sell side, which was residing right there below that. Below that. No, matter of fact, it was the high of the fair value gap. That's the sell side right there. That's the sell side that I was targeting right there, right at the high of the bullish fair value gap on the weekly. Boop. And just like that, that is how I let price show me what it wants to do. Remember this morning? Remember what I was talking about this morning when I said I waited for the change in the state of delivery to be respected before I went long? Same thing down here. Waited for the change in the state of delivery to be respected to go short down to there. And that, ladies and gentlemen, is all I have. I yield my time. Does anyone have anything for me? Did I confuse anybody? Did I lose anybody? Did it make sense to anybody? Did it not make sense to anybody? We're still respecting the new day opening gap. Look at there. Look at there. We got a new day opening gap. Blast off, came back down, came in, filled in the imbalance, left a little piece of this imbalance open on this 15-minute right here. See that little piece of imbalance right there? Left that little piece, right? Left that little piece open right there. Push back up. Still has not taken out that buy side. Pull back down. Filled in all these imbalances here. Respect the new day opening gap all the way to the low. Respecting consequent encroachment on that pullback. So we're still respecting it. Yep. Still respecting it. Went all the way to the low. So we had a gap up, sell side by side, sell side by side, sell side by side, right? Filled in imbalance, pushed up, pulled back down to the exact low of it, and then moving back up. Right? What's above us? We got some imbalances above us up here, right? Got some imbalances above us. So that would be a nice target to get short off of if the bearishness continues. That'd be a nice target to get short off of, right? What would I need to see to get short off of this right here? I would need to see price during the London get up to this and then give me a reversal sign to come back down, right? Give me a reversal sign to come back down. What would I need? What would I need to get long? See this little sibby down here, right? If price wants this to be the low of the week, it's Tuesday. We've made a low. I doubt it because we barely poked in. I really want to see us push deeper into this fair value gap, right? So London, I really wouldn't really be looking for a long setup, but what I would like to see for a long setup, we come down, fill in the rest of this imbalance, and get a reversal signal, especially if midnight is above. If midnight is above this imbalance right here, I would love to see price come down, fill in this imbalance, give a reversal signal so that I could be buying below midnight to attack that, right? To attack that. If midnight, no matter where midnight is, if midnight is below, anywhere below this imbalance and we haven't attacked it yet, right? Get up here into this imbalance and give me a reversal signal so I can short from above midnight to come down and attack this low. Get out of here, arrow. I don't need you. Attack that low. That's just stuff that I would like to see. That's how my mind works when it comes to like trade ideas. I have like upside targets, downside targets, and whichever one we pursue first. If I don't get a chance to, if I don't get opportunity to go with that one, then I look for a reversal or continuation. What's tomorrow? Thursday. Tomorrow's Thursday. My kids go back to school tomorrow. Got ADP, job numbers, PMI. Then Friday we got non-farm payroll. I think that's non-farm payroll. Yes, non-farm payroll. So we got ADP at 8:15, job numbers at 8:30. PMI fine at 9:45. That's it. That's all I got, man. I've shared ideas, shared what I'm looking at. Don't want people to say I'm hiding stuff locking stuff behind a paywall. That's why I took the time to share my ideas of what I'm looking at in the short term as far as day trading and swing trading, because I don't want nobody to be like, hey, we have to be a part of the gang to get all the good stuff. He says he hey, I was going back and forth with somebody the other day. Y'all know I'm Petty Pendergrass, right? Y'all know I'm Petty Pendergrass. And I was somebody was up in here. Like somebody was up in here. I was going back and forth with somebody. Let me see. That's Rhonda. Merry Christmas. This was great. It was on one of my older videos. We was going back and forth. Hey, it shouldn't be this far back. Nah, it shouldn't be that far back. Where did it go? It should have been like right around here. Man, it should have been right around here. Also, just want to say, oh man, I guess it might have been like somebody probably was like a burner account for somebody to come try to troll me. And then now it's gone. They probably closed the account. They probably closed the thing, or somebody might have reported it or something. I wish I could read them comments, man. It was on let me see the video. See, it was on the truth about ICT. Oh, I know why I was coming here. I done got sidetracked. I'm sorry, y'all. I done got sidetracked. This is why I was coming in here. Let me see. Oh, we got some more. We got Kareem the Dream. Oh no, we had Kareem already. Because I remember I said I don't remember this person. We had got all the way up to Jennifer, I think. We had got up to Jennifer. KC, Robinson, DXM, Laverne, Mendez, Callio. Michelle Tuck ain't made it yet. You get close, Michelle. You got somebody who rejoined, then took you out, Michelle. So we those the latest ones to go over a year. KC, let's just say everybody. Lil Hawk, let me make sure I'm sharing my screen. Lil Hawk, first one that's still holding us down. Here to learn and share. Run the Green, Cool It, Miss MJ, Kareem the Dream. Somebody must have changed their name because I don't know who that is, but they done been here forever. Will, Hines, Jennifer, KC, Robinson, DXM, Laverne, Mendez, and Callio. Those are all the members that's 1 year strong. All the members that's 1 year strong. I appreciate y'all. I appreciate all the members, but we celebrating 1 year. We celebrating 1 year for the whole month of January. The truth, it was the truth about ICT, the truth about ICT concepts. Was it part 1 or part 2? Was it part 1 or part 2? Well said, hi Tim. Might have been part 2. It was the dude, man. I wanted to read them comments. Y'all know petty grass. Because it was the one where when Buddy was like, nah, it wasn't. It had to be part 1. It was the one when Buddy was like, you spent the whole lot of time saying nothing, and then somebody else was like, they was like, if you take criticism as education and not, oh man. My wife was like, how do you even have like the time and energy for that? She was like, how do you have the time and energy for that? How I tell things. Dude, there it is right here. This was the first one. That was the first person that I don't want to reply. It's got that account must have closed it. You see how it says 14 replies, but it won't open it up. See how it keep like they're gone. Those accounts must be closed because they gone. See, this was the one. That was the one that started 4 months ago, and I left a comment, right? And then somebody came back the other day and was like, if you take criticism as a learning opportunity, maybe your subscriber count will be higher. And we went back and forth for like 3 or 4 hours. My wife was like, how do you have time for this? This is, see that? No, that's not him. But sometimes he's seen as a content creator, not a mentor, because each and every day you are streaming so long, you really are earning. So long you are earning. What? I don't know. Anyway, it ain't. I guess they go, man. I can't even share the hate fest with y'all, man. I'm mad now. I want to share the hate fest with y'all. Anyway, I appreciate y'all, man, for hanging out with me all this time. It's 10-something at night. You could have been anywhere else in the world, but you here with me. I appreciate that. Is anybody thoroughly confused? Did I lose anybody? Did I lose anybody? Oh, I missed something. Always. Hey, man. That's it, man. I'm about to go get in the shower. I appreciate y'all. Hey, we still in the crazy time when it comes to price. We still in that little holiday weird season. Let price show you what it want to do. Pay attention. If you're not getting your setup, don't try to force nothing. If you're not, you know what I'm saying, well versed in understanding a lot of the concepts, I'm not going to sit here and try to act like I understand all the ICT concepts. But if you're not, you know what I'm saying, got a good grasp on like a lot of the concepts, don't try to force nothing. If you know that the whole me talking about the changing the state of delivery, if that sounds confusing to you, just let it go in one ear and out the other. I don't want to be a stumbling block to your advancements, you know, but all of this stuff ties together. It's like a tangled web that Michael has weaved, and you know, I'm all in on it. It's like I love digging and finding the root of where's this coming from. I like to understand the why, so that's why I dig so deep into it. And till the next time I decide to get on Al Gore's internet, I was trying to look and see if I had anything in my notebook that I wanted to share. I talked about that. I had a piece of paper stuck in there, but I talked about what I want to talk about. Rod Wells, you're very welcome. And everybody else in the chat, you're very welcome. Take advantage of the day, man. Let your loved ones know that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Make sure you speak their love language. Open up the lines of communication so that they'll know your love language, and y'all can, you know, give it how the other one needs to receive it. Go in the other room now. Hug your spouse. Hug your kids. Kiss the dog. Kick the cat. Thump the gerbil. Flip the turtle on his back. Bars. No, don't flip the turtle on his back. Don't thump the gerbil, and don't kick the cat. Don't want Peter coming after me. Till the next time I decide to jump on Al Gore's internet and share my thoughts about the price action. Y'all be safe out here in these trading streets, man. It's your boy Aranya Grande, aka Big Spider. Gone, man. Yeah.